Today's webinar focuses on Equinox Gold. Equinox Gold has been a rapidly growing company within the gold mining space. And over a short period of time, it's moved from really a pre-production name to a producer that is looking at producing just shy of 600,000 ounces of gold this year and has a clear self-funded path to over 1 million ounces of gold over the next couple of years. Today, I have with me Christian Malau, who's the CEO of Equinox Gold. And he will be providing us with the update on the company's plans, its current objectives for 2020, as well as the outlook over the next couple of years. We'll take live questions at the end of this webinar after Christian provides us the update. So please put your questions into the available ability to send them to me, and I will aggregate them and get them put in an intelligent manner so we can ask some good informative questions on the back of today's presentation. To start off, I'll handle some of the disclosures. For Equinox Gold, look at page 2 of the presentation. A full itemization of the disclosures for Equinox Gold reside there, and I encourage you to read them. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research on a number of companies that we have under coverage, and you can see that on our website. So now I'll turn the presentation over to Christian Malau to update what is going on with respect to the company. Take it away, Christian.
Sorry to interrupt. Christian, your mic is turned off. Could you please turn on the mic from the top bar?
Okay, hopefully that's working better. Yeah. Thanks very much for pointing that out now early. Yeah, thanks very much for having me here today, Andrew. It's a great opportunity to sort of share the story, and interestingly, it's something that's come up very quick on some people, and they really haven't paid attention or noticed what's happened with Equinox Gold over the last couple of years. And I'll walk through a little bit of the history of where we're at, and then a little bit on the assets, and then ideally really want to take some questions at the end. So I'm going to go straight to slide number 3 here. When you look at sort of the map and the history of this company, basically 2.5 years ago, Ross Beatty, who's our largest shareholder and the chairman of the company and kind of one of the founders, and myself on the management team, and Richard Wark actually got together in a 3-way merger to create the basis of Equinox Gold. And we were pretty excited. Ross, I think it started his career with Equinox Resources back in the 80s and 90s, and had a good success with that. He's had 14 or 15 very successful companies since then. And he's obviously built Pan Am Silver over about 25 years. He's got a clean energy company. And this was kind of like a bookend to his career, as he described it. And it was a real opportunity to create Equinox Gold through that transaction. And we really haven't looked back. The thesis really was to put together sort of that mid-tier to larger scale gold mining company with diversity through assets, through jurisdictions, and ultimately be an attractive growth vehicle in this gold market, which we always felt would be in an uptrend at some point. I have to admit, I never would have guessed really that gold would be over $1,700 this year. So I guess if you want to say we've caught the wave in a sense fairly well, we did. We started buying some of our first assets when gold was $1,100, $1,200, and really it's been fantastic since then. And when you look at that map there, we've got roughly a third of our assets or reserves, resources, roughly value in Western US, about a third in Mexico and a third in Brazil. The recent merger we just completed on March 10th was Equinox Gold and Leah Gold, and basically brought together two companies that were building multi-asset portfolios in the Americas. We did a nil premium merger, announced it in December. We really were pleased with the market reaction to it, and the nil premium nature of it, putting together logical businesses that were Americas focused and getting us well over that $1 billion threshold in terms of market cap, really brought a new institutional shareholder interest to the story and liquidity, and allowed us to really start to capture some of the passive fund flow and also have diversity and strengthen our balance sheet at the same time. We refinanced the balance sheet. So a lot happened over the last few months here. And as you can see now, there's the 6 producing mines in the portfolio. There's the 4 growth projects, which Andrew referred to. And I think it puts us towards the leading edge of the growth profile of many companies. And growth has been not a dirty word, but not overly valued, I would say, over the last 8 or 10 years, when our sector has definitely been more selling assets, reducing leverage, etc. We now are one of the few companies that has roughly a 20% growth profile over the next couple of years coming, and it's all internally funded. Particularly at these gold prices, we're really pleased that it gives us a pathway to 1 million ounces a year of annual production. We also have that strong balance sheet that I mentioned, so we have almost 480 million of cash on the balance sheet at the moment, and our debt position is almost the same number. So we're almost net bank debt neutral. So we're in a really strong position. And obviously with the current COVID environment, which just talk for 1 or 2 minutes here on, it's been a strange year in a certain way. We've seen obviously gold prices go well over 1,700. We've seen currency rates fall significantly. We've seen diesel prices fall. Everyone's been concerned about jobs and that. So in a way, it's been a little bit of a perfect storm for the gold sector. Margins are wider than they've been in many, many years right now. But on the overlay to that, there's obviously we're managing through this code environment like everyone else is. So it's added certain uncertainty to the sector and many other sectors as well. And a lot of our management team actually had worked together at Endeavour Mining and building that company from sort of single asset up to sort of 4 or 5 assets with a good growth profile in the portfolio. And unfortunately, I guess, we'd lived through the Ebola crisis in West Africa. So we felt reasonably well prepared to manage through this. A lot of the similar protocols and procedures on remote sites are put in place to keep people as safe as possible, keep communities as safe as possible, but also to keep people's jobs. So we've been really focused on that end of things. And then, in terms of business continuity, looking at your supply chains, looking at gold shipments have been real priority for us. And, to almost my surprise, I've been really pleased with how the global supply chains have stayed intact in many ways. And we've seen small delays in certain commodities and reagents, et cetera, being shipped. But generally, we're still seeing all our suppliers from be it China, Europe, North America, and South America still continue to supply the business in a very robust manner. And also gold shipments continue to go. There was a small shutdown in refineries in Switzerland there, but other than a couple of weeks there, it's really been almost business as usual with a couple of delays in flights. And then in terms of workforce support, we really are trying to look after the workforce. I think we're also faced with the reality here that COVID isn't necessarily going to have a vaccine anytime soon. We're going to have to find ways to manage and operate through it and with it. We're working in North America and South America. There are countries like Brazil that unfortunately are probably at the worst end of the news spectrum at the moment, where cases have been increasing, and we're doing our best to manage our remote sites there. And estimates from some commentators are that it could peak in August. Who knows? So we have to just manage through this in a very sensible way and assume it's going to be here for the foreseeable future in the next sort of 6, 9, 12 months. And I'm sure they'll come up with certain solutions and tests and procedures that will make business much more normal in the future. But as of today, all of our mines are operating. Mexico was on temporary shutdown for about 2.5 months when the central government basically asked all non-essential businesses to go on suspension while they sort of got a grip with the virus spread. And now we're actually ramping the mine back up. So all the operations are currently operating. So we're weathering through this storm, and with a strong balance sheet, it's a good environment with margins being pretty good in the current state. Looking at the capital markets perspective, like I said earlier, we were at 2 smaller companies, Leagold and Equinox Gold, that came together recently. We both had a similar profile, like you see on this slide, of sub $500 million to just over $500 million market caps, very thinly traded, $1 million a day of trading on the stock exchange. But as of sort of December onwards, we've really seen a huge uptick in that, partly because the gold sector has been seeing some renewed interest, but I also think our story is really resonated with people, where we've put together 2 logical companies at nil premium. We're going to achieve some synergies from that. We're combining the 2 Vancouver head offices into one office and getting some savings from that. And also really come on the radar of the GDX and GDXJ, and we're now owned by both of those passive indexes. And this Friday, as of tomorrow, will actually be qualified and be entering into the TSX S&P Composites. So it's been a real step change for us. So our daily liquidity is well over $30 million a day. We're traded in both New York and on the TSX now. So real access to the shares for many people from all different places. And we've seen an excellent response to it. On that back of that, really, this sort of merger, Paulson and groups like Van Eck out of New York and Joe Foster really been asking for this type of transaction to create a more efficient, lower cost of capital type of business that is really investable. And we've seen both of those parties particularly invest in sort of reasonably meaningful ways into our stock since the announcement of the merger. So really nice validation of the strategy. And in terms of that shareholder base, as I was sort of alluding to there, one unique thing with us is we really do see this as almost an owner-managed type business, even though we're a public company. In terms of ownership of insiders, where it's almost 9%, and of a $3 billion company, that's a very meaningful ownership. And Ross Beatty obviously owns the largest proportion of that with just over 8%. He's continued to support us all the way through our growth phases, and he's contributed capital. I think it's over $120 million to date. And myself and the other management team members and some of the board members have put meaningful capital stakes into this business as well. I think I put well over $2 million myself, and I'm not a wealthy guy. I think I have a greater percentage of my net worth in this than Ross does, and really proud to be an owner manager in a sense of this business. And we've really seen that donut change over time with a bit more institutional ownership coming in recently with the scale and the diversity. And what we're really proud of is that graph on the right, where we're one of the leading, most unique companies in terms of a company of this scale. We have almost 9% owned by insiders. So when we go to board meetings, we make capital allocation decisions or do M&A, it does need to create value. It's our money too. We really are rewarded, aligned with shareholders, and really see this as a long-term venture that, similar to Pan Am Silver that Ross created over 25 years. The goal here is to create something of similar scale and style over a 5-year period, budding gold. And, we're well on the path to doing that right now. And the ultimate exit strategy, when sometimes we're asked, or Ross is asked, there isn't really one. We're here to build a long-term viable business that will see us through cycles. And we think that's the best strategy. Build a great business. And how are we actually doing that? This slide just gives you a nice picture of where we've come from and where we're heading to. And as Andrew said, we really came from a standing start in, call it early or sort of late 2018. We had one development asset. We bought the Mesquite mine off of New Gold for about $150 million, added some nice production when the gold price was below $1,200 an ounce. And ever since then, we've done a couple of deals to either add some assets to diversify the mix of the portfolio. We've also built mines like Aurizona in Brazil. So we've had kind of a combination of a bit of M&A and a bit of internal growth through development of our own assets. And as you can see, we're roughly in that 500,000 to 600,000 ounce range. So a nice mid-tier sort of status. In the next year or two, we're kind of adding 2 projects to that. The Castle Mountain mine will be in production in Q3 this year. That's in California. It'll add about 50,000 ounces. And also we'll be doubling the capacity in Los Filos, which is our Mexican operation, going from roughly 200,000 ounces a year to 350 to 400,000 ounces a year. And then a little bit further out, we've got Santa Luz in Brazil. We'll be rebuilding that past producing project for less than $100 million. We'll be adding another 125,000 ounces a year of production. And also potentially in probably 3 years or so, we plan to increase the production at Castle Mountain to close to 200,000 ounces a year. So really nice growth trajectory, all funded internally. And then how does that create some value? We've already started a little bit up that value curve currently. When you look at these bubbles here, they indicate the market cap of companies. The price to net asset value is on the left-hand side. We've been trading that 0.7, 0.8 times price to net asset value. As we move to the right, we have larger scale production, a little more diversity. We plan to be in that space that is more comparable to the Yamana's, Evolution's, B2's, Endeavour Mining's, that produce between sort of 700,000 to just over 1 million ounces of gold per year. And they tend to trade at multiples of well over 1 times NAV. And a lot of them have market caps of $5 to $7 billion. And currently we're at about 3. So we're really excited about that prospect over the next 12 to maybe 18 months at most, where we continue to develop the portfolio and earn our way into that status. Look at the next slide here, just a quick summary, and gives you a bit of perspective on the assets in the portfolio. Los Filos is the largest one in Mexico, just under 200,000 ounces of production this year for a partial year. when we acquired it as of March 10th. We will have to reset the guidance slightly on that one because it did have the 2.5 month suspension. It does push some of our higher grade ore in Q4 into the next year. So as we get ramped back up and our Q2 results out, I think we'll be in a good position just to update that one. The other mines continue to operate almost as normal. Aurizona is doing about 120,000 ounces. That's in Brazil. Mesquite's doing just about the same amount of production. That's in Western US. It's been going on and off for 30 years. Fazenda is doing about 75,000 ounces on a full year basis. This is a partial year. RDM is about the same size scale. Both of those are in Brazil. Pilar is the smallest asset at below 50,000 ounces a year. There's a chance we end up selling that one. It's not as meaningful in our production base, and we really think we can get better returns from the larger assets. And then as you can see, Castle Mountain will come into production late this year as we start to pour gold there, and that's in California as well. Santa Luz, there's no production coming this year. It's on care and maintenance right now, but we hope to launch into construction later this year. The interesting thing here is also the all-in sustaining costs, just around $1,000 an ounce. First quarter was about $968. And interestingly, in the last quarter, we've seen a real depreciation in the Mexican peso and the Brazilian real, and we've seen a huge drop in obviously the diesel prices. So those costs are looking pretty darn good right now. And I think last month or two, we've seen levels that are slightly below that. So we're really pleased to see that margin sort of widening in this current environment with the gold price staying fairly strong. And just to take you through the key sort of core assets to start, and I'll just touch on the smaller ones at the end to give you a flavor for where we are and what we're doing. Los Filos, as I mentioned, is in Mexico. It's just under 200,000 ounces a year. Gold Corp put it into production, I think it was around 2008. The Leo Gold guys bought it a few years back and really done a wonderful job with it in the sense that this was a mine that had a 1.7 million ounce reserve. It now has 4.5 million ounces. So they've really done a great job of increasing the mine life and the capacity here to increase the level of production. It's a big heap leach operation in Mexico, got a number of mines, underground and open pit. What we're planning to do, and we're doing at the current stage, is looking at could we add a carbon and leach plant that we can recover 90% of the gold for the higher grade material that we're getting out of particularly the underground deposits, and keep the heap leach pad going for the lower grade material and get 65 to 70% recovery. So at the moment, we're just sizing that plant. Originally, Leogold had planned to put in a 4,000 ton per day plant. We're looking at maybe an 8,000 ton per day plant. The engineers are just updating that currently, probably sort of in the Q3 period. We hope to come out and give the market a good indication of what that plant size will be, what the capital will be, and then launch into official construction in the second half of this year. So you're starting to see production come from the CIL plant probably in early 2022, which with all those changes, including opening up a new underground deposit, which is higher grade, and also a new open pit, which is slightly higher grade than our other open pits, you'll be seeing that production move to the 300,000 to 400,000 ounce range. And, you know, it'll have roughly a 10-year mine life with another 6 million ounces in resource that we hope to continually add to the reserve base over the years. And really, this has been almost starved of exploration. So we're really excited to get back there and actually make this a longer than a 10-year mine life at the end of the day. This just gives you an overview of the various deposits that we're actually extracting the ore from. A couple of open pits and a couple of undergrounds, 10-year mine life, and rough capital to get this thing up to that 400,000 ounces of production is just over 200 million of capital. It might be slightly more with a larger plant, but that includes opening up a new open pit called Guadalupe, opening up a new underground called Burnham Hall, as well as building the CIL plant. So lots of work to do this year, next year to get into that sort of nice phase of 400,000 ounces of run rate production. Now going to Brazil, into the northeast of Brazil. This is, again, a past producing mine. Myself and the team at Equinox had put this back into production mid last year for about $150 million of capital. You see in the foreground of this, there's a crusher there. There's two bright blue mills on the left-hand side that were brand new. That was the key crux of the change that we made to this business. It never had a crusher, and it didn't have a, call it, full milling circuit. So we put those in place. We took advantage of refurbishing the back end of the plant, current existing tailings dam. It also had the open pit already in place. So we were able to take a mine that was producing, roughly 80,000 ounces of gold per year, but only the soft material was able to go through the plant because they had no crusher. We basically engineered this new plant and put it in place, and it's been performing extremely well since mid-year last year when it went into commercial production. And this year it's off to a good start. Costs are in good shape, and production's been pretty good as well. So this has become a reasonably steady state, 120,000 ounce plus producer. And when you look at this page, really currently I've sort of described what we are: 1 million ounces, 120,000 ounces a year with a bit of upside. And what we're really excited about is the expansion upside. This is a 1,100 square kilometer land package. It's a greenstone belt, quite similar to some of the West African deposits, really underexplored. What we really love about it is there's lots of potential to explore. And when you look at this next slide, this is where the actual main 1 million ounce deposit is in Piaba, which is that central pit you can see in pink there. It's 4 kilometers long. The plant is right beside it. And then you see the really light pink there to the east and west of the Piaba pit. Those are golden soil anomalies. The artisanal miners have pulled out nuggets from 4 to 30 kilograms out of there. I've got some beautiful pictures actually on my desk. And we've been exploring those areas in the last year or so, and we're finding some nice high-grade hits there right at surface. So Tatajuba, Jenny Papo, Mikote, those areas that we're going to be exploring this year and into next year. We hope to bring Tatajuba ultimately into the mine plan in a few years' time. We've got a small resource we've already put into the resource at the end of 2019. And then you have parallel structures around here. They've been mining here since the 1650s when the Jesuits first came, and they call it Aurizona as Gold Zone for a reason. And we've got targets about 15, 20 kilometers away. I've had a bit of geophysics, a few drill holes. Some of them are even totally untouched and have really nice surface samples. So we're really excited about the whole region, not just this initial deposit. And then after that, the next exciting part is the underground. So we've got 1 million ounces in reserve. We just put out a PEA study in the last couple of months here, and it indicates another 3/4 million ounces right below the current pit. So the pit will go down to about 200 meters, and then the ore body is steeply dipping, fairly wide, and it's amenable to long hole stoping. And so for about double the grade here, 2.8 grams to 3 grams, you're basically going to be underground mining eventually, and that almost doubles, not quite doubles, your current reserve. This is currently only a PEA, so it's not in reserves yet, but we're actually going back and drilling out more, basically as we speak, and we're going to upgrade this to a PFS study for 2021. And for a modest amount of capital, give or take $70 million, you're going to be able to add some really nice high-grade feed to an existing plant and operation. So we've got all these potential areas that we're looking to expand. Number one, the production base, but also extend the mine life here. So currently, we have about a 7-year mine life, but we see this as going, potentially for decades. Then you come back to California, and again, it has a sort of similar theme. This is a past-producing mine in the 1990s to the early 2000s, shut down because of the low gold price. Viceroy operated it, produced 1.2 million ounces, operated very nicely. As you can see here, it had been reclaimed, and you can still see some of the pit walls there, but a lot of it's gone back to its natural state. You can barely notice a leach pad in the background there. This site still has existing permits, and so what we're really excited about was we've got a 3.6 million ounce reserve here, so a bit smaller than Los Filos, but a 16-year initial mine life. So this is a big deposit in the western U.S., right on the Nevada border on the California side, and it has existing permits that are in place. So this EIS is still in place from the 80s and 90s. Basically, we're going to be able to put it back in production in Q3 this year. It's about 60 million of capital. It'll be a big heap leach operation to start. And because we have the other mine, Mesquite, down the road, it's about a 4-hour drive on a paved highway. We're actually going to smelt all the gold at Mesquite. So we're going to truck loaded carbon down there, get some synergies by not having to build 2 parts to the plant that will smelt the gold. And we're also going to be tax consolidating those 2 operations. We're going to be sharing some of the management, some of the purchasing, some of the systems and people. So real opportunity to make this a bit of a complex there in California with a bit of distance between them, but there's a lot of opportunity to save some money. And then after we get phase 1 into production later this year, the plan is to go out and amend the permit and actually basically spend about 2 years hopefully doing that so that we can come back and upsize this operation to about 200,000 ounces a year, which would be a big heap leach operation, plus a small plant of about 3,000 tons per day, a CIL plant that will take the 3 gram plus high grade component and actually recover 90% of that. So about a third of our gold would come from that small plant. So really excited about this. It could be a long life, 200,000 ounce producer. The first phase is only a 3-year plan at 45,000 ounces a year. That could go on for well plus 10 years if we need to. So we've got some contingency there for if permitting takes an extra year. Let's say it's California. So we assume that it'll take us a few years to do. Jumping back to Brazil, and in a similar vein and theme here, this is a past producing project called Santa Luz in Bahia State. Yamana put this into place originally. It was a CIL plant. It has a bit of carbon in the ore, and the recoveries were quite poor and weak. So it needed re-engineering, it needs some test work, some metallurgy done on it. And basically, we're going to resurrect this for just under $100 million of capital, just finishing the engineering work and cost update as we speak here right now. And we'll basically go into building a resin and leach plant, so modifying it for resin and leach, which will deal with the carbon in the ore. And the plan is to have that start into construction the second half of this year, and then have go into production late 21 or probably early 2022. So you'll be adding another sort of roughly 125,000 ounces a year for the first number of years and 100,000 ounces over an 11-year mine life. So another attractive asset in Brazil. We'll be sharing obviously a lot of our infrastructure in terms of back office and that between the mines in Brazil, joint purchasing. We'll also be using our exploration team to help out here. And when you look at this, it has a lot of similar feel to Arizona. There are parallel trends. There's underground potential. You know, this one, again, it starts at an 11-year mine life, but certainly our ambitions are to extend that mine life in due course. And then just quickly summarizing the other assets in the portfolio. Mesquite, as I mentioned, is in California. It fits in very synergistically with Castle Mountain. It's slightly smaller scale, a little bit longer in its life. It's been going on and off for about 30 years. It's actually the second time I've acquired it. I was at New Gold when we acquired it back in 2009, I guess it was. It's a very workmanlike mine that's done a great job of just extending mine life gradually. We bought it with sort of a 3, maybe 4-year mine life and 2 to 4 years of residual leaching to it. We've already extended that mine life. We still have the same mine life after almost 18 months of production. It's producing gold at a good cost at well below $1,000 an ounce today. And we've got some new exploration permits around this area that we plan to go and explore once we get the rights to drill. And we'll be waiting for those probably next year. So this one, again, it may not have a 10-year mine life, but it's been a great contributor to the bottom line. It's been a great contributor to helping get Castle Mountain up and running, and we do see some potential to extend that mine life as well. And then the next two basically are about 75,000 ounce producers in Brazil. Fazenda's been a nice mine that's going on and off for 25 years. It produces 75,000 ounces at $900 all in cost, although with the current Brazilian real exchange ratio, it's below $900 an ounce. So we're seeing some nice cash flow coming out of that mine. It tends to replace reserves every year or two, so we see this as a nice exploration potential. And then when you look at RDM, it's a mine that did have its challenges in the past. It's about the same size of production, about 75,000 ounces a year. Slightly higher cost, but one interesting thing, or a couple of interesting things that the Leagold team did very well was they connected this to the grid and went off of diesel power. So they've got some cost savings and some reliability now coming off an electric grid. And as well, it didn't have all the water it needed in the past. And this year we've had very good rains, and also the reservoirs have filled up nicely. And it looks like we should be able to get through this year with the water that we have. So this one should be a nice contributor to the bottom line this year as well. And then, as I mentioned earlier, Pilar is the smallest asset at sub 50,000 ounces a year. We would entertain offers for this one. We want to focus the capital and management time on the larger assets that have slightly greater potential for return on capital. So we want to make sure we have a disciplined approach to the portfolio. And then ESG, I won't spend a long time on this at the moment, but as we become a more mid-sized company, it's become a very important topic, and certainly the market is demanding it these days, that there's a real focus from our industry on it. The environmental and social side, I think, are pillars of our business. We have to do those well and right. We operate in remote communities. So I think we do a really good job. There's some indications here that we do, obviously, from some of the stats and the work that we do. I think one of the key pieces for us now is communicating that to the markets and to stakeholders all around the world. And we'll be starting to up our game on that front. We'll be having more of an interactive website that will have statistics on a regular basis that will be updated. We're also going to be coming out with our first sustainability report at some point next year. So good opportunity to communicate what we're doing well there. And governance-wise, again, I think we're well positioned on the governance front. It's a very aligned management and board with shareholders and stakeholders, We have a long-term vision for the company. We want to do the right thing, and we've really aligned a lot of our pay packages and structures to the long-term performance. People don't get the industry-leading bonuses on an annual basis. We have to perform over a period of time that lines up nicely with our long-term shareholders. And then just touching on the catalyst for this year, just to summarize things, we've got a lot of focus on operations and development. We've got to integrate the business, which is almost done now. It's gone very well so far, despite the COVID disruptions. And also, we're going to get on with building a couple more mines here, which we should launch into in the second half of this year. As I mentioned, exploration will become a key focus starting again this year. We're going to do a midterm plan on our exploration coming out sort of in the second half this year internally with those plans, so that when we go into our budget cycle, we're well prepared to allocate capital next year to it. And corporately, as I mentioned, we're now in various indices. We've had great support from that. We've got a bunch of new institutional shareholders in the stock now. And we're really looking to build that credibility to get that re-rate, which I mentioned early in the presentation. And we've been built through an M&A process as well as internal development. Our focus now is on that internal capital allocation, building out our assets. We won't be blind to opportunities in the market. If there's a really good asset you could add, or a long life asset, or better quality asset, we want to continually evolve the portfolio, but we don't need to do a deal for size sake. So in a way, that just brings to a conclusion, I think, a summary of running through our rapid growth and development there. And maybe I kind of turn it back to Andrew here for a bit of Q&A.
All right, thank you very much, Christian. So let's delve into some of the questions. There's quite a number of questions on the that are queued up, and so I guess the first thing I'm going to ask you is really just to step back and maybe expand the discussion on ESG a bit. It really is topical, and it's really something that companies your size are really driving towards. Can you give us a sense of what are the chief challenges in bringing Equinox Gold's documentation up to a standard that is acceptable from an investor standpoint?
Yeah, it's been really interesting. I mean, I've done a bunch of marketing in Europe, I guess, on the tail end of last year when I was physically allowed to go there. And particularly the push from the Europeans and now also the North Americans is you're going to need a sustainability rating. You need very clear disclosures that and also need good dialogue and communication. So I think we've got various fronts, but one obvious thing for us is being small companies moving to a joint combined business. We need to harmonize what we're doing as well. So at the moment, we're looking at what we're doing well on both the Leagold side and our Equinox side, and trying to harmonize that. Then get out with some data and statistics. So we're going to plan to have an interactive website, which I think, I don't know if that's leading edge, but it's certainly going to be more user-friendly and more topical for the investor and available, where it won't just be an annual sustainability report that you come and read once a year and it's almost old news by then. I think you still need that because I think it communicates things in a very concise format, but some people are going to want to see how we're doing on a quarterly basis. So we're going to do that. And then I think that sustainability report, and we're really taking a step back in the sustainability reporting and going, okay, there's various standards across the board, GRI, et cetera, that a lot of people are using, but we want to say, is that the best format that we can use? Because we want actually users to use it and actually appreciate it, not just to have a huge, thick, glossy report. So we're actually doing a lot of work right now. We've also got some external consultants helping us just to kind of steer us in that direction. And interestingly, when I step back, we're actually doing a session the next week or two here. Ross Beatty is a really interesting character when it comes to this, because I think he'd classify himself as almost an environmentalist who's also a miner. I think he said in the past, 99% of charities' monies go to looking after people around this world. There's already too many of them probably. And so what he's planning to do is leave all his charity money towards animals and the environment. So he's not just talking the talk, he's actually walking the walk here. And it really will drive some of the things we do. And he has a clean energy company, so he fundamentally believes in things like renewables and that. So we're going to actually analyze things in our business. Could we move to renewable sources of energy? Can we reduce our carbon footprint realistically? Then we need to communicate that. Can we also look at things like tailings dams? Tailings dams in Brazil have been a topic of debate, obviously, over the last couple of years with that Brumadinho disaster that they had. And could we move to dry stack or filter tails? So we're addressing all those things on a practical front, which are good business sense, but also really good from the ESG front, I believe, too, and also great for the environment. And it's kind of those stepping through the hoops to get there. And ultimately, I hope it translates into we're one of the sort of leading companies in that front, because actually that's the way we think and we do business, not just because we communicate that. And so I think it will take us a year or two to actually achieve some of these things. So we're also not telling people we're going to be number one in that space right away. So, give us a little bit of time here, but it's absolutely a focus now.
Excellent. That's great. Just talking about the relationship with Ross Beaty and its evolution. I mean, can you give us a sense? Has that been, in your view, an integral relationship to be able to provide Equinox Gold the capacity to grow in the manner it has?
Yeah, I mean, I honestly think it's been a huge advantage to us. When, say, 3 years ago, when it was hard to raise money in the markets for equity investors or for equity issuances, and we had the ability to, when we bid for Mesquite, I think it was Ross Beaty and Richard Ward could underwrite the equity on that bid. I mean, it just allowed us to actually look to growth when you should be buying assets, when assets are cheaper. And also, Ross has attracted some of that longer term, call it supportive money, that have actually supported him over the years and who are loyal to him in a sense that they know that he's there to commit his own capital in a big way to support the business. I remember a bunch of retail investors had him in a room one day and they sort of said to him, "Hey, Ross, you're using a bit of debt to buy Mesquite, a little bit nervous about it at $1,100, $1,200 gold. How are you mitigating that risk?" And he just said to them flat out, he says, "I've got $500 million of personal liquidity if the company needs it. And right now is the time to borrow a little bit of money and actually build the business." And so it's given us the confidence as a management team to actually, maybe take slightly bolder moves in acquiring and integrating a few of these assets and building assets when it's the right time to do it. And, again, we've had other supporters like Mubadala, which is the sovereign wealth fund out of the Middle East, that came into the story last year. And basically, Ross has had a relationship with them for about 10 or 15 years, had a lot of support out of the Middle East in terms of his other companies. And they were looking to build a gold company, but they didn't have the internal management team. They said, "Ross, we trust you, we'll align with you, we'll support you financially, but you need to run the business with the team." And so that's been a kind of an ancillary benefit of having Ross involved. I'd like to say it was all about me, but it's not. I find that it's given me the confidence to talk about the long-term vision in the company when Ross is backing it as well. So it's really been fantastic.
Good. Look, this company has grown and through M&A, and when that takes place, there's a lot of integration that needs to take place. Can you talk to us about where you are in the steps towards integrating all the pieces of the business, and how long do you see or perceive it to take to really get it to be a singular platform, I guess is the best way to put it?
Yeah, I mean, I guess in a certain way, practice makes perfect in that sense. A lot of the management team here, there's a number of people that were through that early stage at New Gold when we were building it from single sort of asset up to sort of 3-4 assets. In the early days, there's a number of people in this platform here that are ex-Endeavour Mining, including myself, the COO, head of technical services. All of our country heads are actually, interestingly, ex-Endeavour Mining. Happen to be, some of them worked for Equinox and some worked for Neil at Leagold. And when you put those together, it was amazing. Our commonality to running business was very similar. We really look at the individual countries and assets as almost having senior leadership that's very strong in country or at the asset level that almost runs their own business and has accountability. So it's been, knock on wood, reasonably straightforward so far at integrating, because we also had a lot of KPIs and touch points with our business on both sides that had a lot of similarities, and the individual personalities had initial comfort level working together. And I just absolutely thoroughly enjoyed working with Aki and the guys on the Leagold side. And I'm really pleased that all the people on my side have actually gotten to know them, even though most of it's remotely through this kind of communication forum. And in a weird way, the COVID crisis brings a team together very quickly, because we didn't have time. I think it was within a couple of days of actually completing the merger, we were going into sort of crisis management mode, and we weren't traveling the world. So we found ways to communicate. We had no choice. And you quickly forgot, was that person from the Leagold side of the merger or that person from Equinox? And we just all mucked in, and we had certain roles that we had to play. And I guess sometimes a good crisis creates unity in a team. And so I'd say we're virtually through the integration right now, and I'm very happy with the platform. It can always get a little better, and you can always do things a little more efficiently, but actually we've very quickly moved to a more integrated platform.
That's great. With respect to that platform, you're already talking about optimization. You're already talking about assets that you might be looking at divesting. Talk to us a bit more about that. Talk to us a bit more on which asset within the existing portfolio you have the most enthusiasm as a group for, which one you see the most upside within that portfolio, and then talk to us about new opportunities. Gold prices moved up abruptly this year, but are you still seeing opportunities that might be of interest to Equinox?
Yeah. So taking that step by step here, I guess what are those opportunities that are right in front of us right now? And interestingly, it's a very similar analogous playbook in the sense that what we were doing at Endeavour Mining when kind of I left just before Neil and came back to Vancouver, and Neil left obviously about a year after me, and we were kind of building a portfolio, putting assets together, building upon them on each one, almost adding sort of better quality assets along the way, and eventually get to that point where you have a core business and you can start to either sell or do something with the smaller assets and focus on the core ones, because you really do get your return on capital from usually those core, longer life, lower cost assets. And so we're probably entering that phase in the next 6 to 12 months here, after this merger, obviously. And from a kind of optimizing the portfolio, like I said, anything below 100,000 ounces has to be considered potentially. I mean, at the moment, it's really only probably the Pilar asset that's really small. And I think there are other parties that have expressed interest that could actually maybe invest the capital, the time, the drilling to take that to 75,000 ounce producer over a few years. It's got a 2 million ounce resource. So let them put all that capital and time and attention into it, where in a way our attention is focused on those bigger assets right now. And I love this analogy in a certain way, but when the Alacer SSR deal was announced recently, we had a whole bunch of calls from bankers saying, hey, you guys should interlope. There's this nil premium merger. You guys should buy SSR. It fits in your portfolio better than Alacer. You can argue all different things on that. But when we looked at that, we said, hey, there's $3 billion kind of market cap for SSR. They produce 300,000 to 400,000 ounces a year. That's a pretty steep price for us to pay as a company of a similar size in terms of market cap, but obviously much bigger production base, when we can actually spend $350 million for round numbers on developing Santa Luz and Los Filos to add 350,000 ounces of production. So we kind of looked at that capital allocation and staring right in front of us are these assets that we can expand right now, almost. It'll be a few months before we launch into that, but really they're right now. And so going back to your question is, for us, it's Santa Luz and Los Filos are kind of core development projects that are on the cusp of being ready for production here, or for construction here, that will go into production in, say, 18 months from now. So those are right at the forefront. Castle's almost done. We're 80% done on that first phase. So I almost look at it as behind us, not quite. And then the second phase is a few years out. So in a sense, those two construction projects are right in front of us, then Castle after that. Those are probably the key things we're going to focus on. And then exploration. And I think now that our balance sheet is so strong and the gold price is strong, we can allocate more money to that over a midterm plan and actually extend mine lives, which is important on a few of the assets. I can't remember, the last part of your question was more on M&A, wasn't it?
Well, you've kind of answered it. You've pointed out that within your existing portfolio, you see better opportunities to grow the business currently. And really, if you were looking at something, it would have to be competitively priced. It would have to be one of those opportunities that is lying beneath the radar and something that your team identifies and can see the value prospect.
Yeah, no, actually, that's a good point. I think now you're unlikely to see us buy something that's less than 100,000 ounces of production, maybe even slightly bigger than that. You're more likely to see something that fits geographically in the Americas, let's call it, where we are. We're getting very good support from a lot of shareholders, are happy with us being in the Americas and being diversified. I'd love to add another country, another asset along the way, but as you said, it would have to fit and be the right price. And ideally, it's a longer life, lower cost, slightly larger asset, which everyone wants, I'm sure. So we have to be discerning. I think it's the way to go.
It's good. When Ross joined, he clearly established some parameters for Gold, and it looks like that 1,000,000 ounce target is definitely within the capacity of the company. But there was also a discussion about dividends. I'm just wondering what you're thinking as a company about dividends and the potential to exercise and implement a dividend.
Yeah, it's actually become a very topical question. I'm going to say even in the last 2 weeks or 3 weeks, we've had a number of calls with Australian and Asian investors, and one of the top questions has been dividends. When? The plan was always kind of like Pan Am Silver, again, built over 25 years, got to steady state, started paying a dividend. You look at groups like Yamana, who are doing an excellent job of rationalizing, stabilizing their portfolio, paying a nice dividend now. And you're seeing, I think it's really benefiting them in terms of their investor universe, in terms of the market cap and valuation. And we know to get there, the question is when. And I've sort of been of the view that you've got a growth portfolio, you've got an allocation of capital that's focused on that growth. That's the best place for our dollars today. However, if once we get through this COVID period and gold price is still, say, around these types of levels and cost base is still in a good place, you kind of go, we can fund all of our development capital potentially from operating cash flow. So we're sitting there with a reasonable amount of actual cash on the balance sheet too. And so maybe it is sooner. So I had one shareholder say, you know what, if you showed that you could allocate a small amount of that capital to a dividend, call it next year per se, and you're building or finishing off a couple of those development projects, it would really show good capital discipline. It will bring a certain investor universe to your stock and will build your credibility sooner than may have happened otherwise. And so honestly, I think our board needs to actually contemplate that as we go through this year. I do think you just want to get through some of this uncertainty with COVID first, though.
Understand.
It could be as early as next year. I don't want to promise that today, though.
Yeah. There was one question that kind of fits into that running the business and thinking about risk here. What are your thoughts about Brazil as a jurisdiction? What are the advantages that you see, and then what are the challenges that you see? Give us a bit of insight into your thinking in that regard.
Yeah, and it's been a question that actually been asked a reasonable amount over the last few years, because myself and a lot of the team have worked in West Africa for about 8 years, worked in Canada before, worked in Mexico, Brazil before, Australia. And I always come at this thing as political risk comes in all different shapes and forms, and sometimes you almost don't notice it. But right now I kind of go, do I want to permit a mine in British Columbia where I live right now? Is it going to be easier than doing business in Brazil or West Africa or certain things? Maybe, but it comes in a different form. I've seen permits get rejected in places like this, where in British Columbia, where people consider it to be a safe jurisdiction. I think the key is actually diversification, where things will change over time in various countries, and regimes and governments will change, and attitudes towards mining will change. So have diversification, number one. But when I look at Brazil specifically, it's got a higher level of probably bureaucracy, tax compliance, labor laws, and that. But I think it's made some positive moves over the last 3 or 4 years since we've been involved. And I've been quietly encouraged. Number one, they've had the iron ore situation. Price fell a lot, so there are a lot of people available. I think the government regime has become a little more business friendly. So I'd say the regulatory environment, the labor laws, and that are more equally balanced now than they were when we first came into the country. We've seen some of the corruption disappear from a number of politicians and business owners being put in jail, which is great. So it's getting easier. It's not simple. I think you want to have a platform in Brazil where you have a really good scaled asset. You look at Kinross, you look at AngloGold, you look at a couple others that have large assets, or you want to have a portfolio of, give or take, 2 to 4 assets that you can share around a little extra cost and bureaucracy management in a sense. And I think we're at that scale now. And, but overall, it's been a decent place to do business. I was sitting with some of the mining agency guys in Brasilia one day, and they said, sometimes people criticize Brazil, and we think it's a little bit unfair. They said, we're ex-Vale. We're now trying to help the ministry become more efficient on permits and regulations and renewals and that. I think they have. But he said, we don't nationalize assets. We're a huge mining country. That would be a shot in our own foot. Where certain other jurisdictions, there is the risk of real major change. Where at, say, Brazil, it's creeping change sometimes. And I've never worked in a lower tax jurisdiction than, let's say, take Arizona. I think it's a 16% tax rate. Name any other jurisdiction where it's corporate tax of that. 1.5% royalty, very low government-wise. And then also they own 0% of your project. And I worked in jurisdictions that are many multiples of that. So I don't know, I take it with the good and bad. And I say, you know, it's part of our portfolio. You've got to have good people in country to manage it and ideally have scale.
Okay, good. Look, within the portfolio that you have, which is that asset that you're most constructive on? Where do you see the most potential within your existing portfolio?
Yeah, I mean, I'm just sort of getting to know the Leogold assets in a certain way. I'm really excited about both Santa Luz and Los Filos. Obviously, the one that seems clearest in a sense right now is Los Filos, because they'd already initiated this opening up the new underground and the open pit, getting to higher grade material. There's a clear path towards 400,000 ounces a year, which makes it a real good tier 2. Is it a tier 1 asset? Not quite yet, maybe. But it's a good tier 2 asset that has a long life to it, and there's lots of gold in that area. So I kind of go, there's multifacets to actually making that a really nice asset. Then I look at Santa Luz and go, for less than 100 million of capital, add 125,000 ounces of production, great infrastructure there. That one's a little more simple. So I kind of like them both. And then I love Castle, but that's a little bit longer term to get that to that 200,000 ounces as well.
Okay. Is there a desire to have exposure to a tier 1 asset with Equinox, and how do you think about that? You know, do you think about teaming up with another partner and looking at jointly developing a project? You know, how do you think about some of those larger assets and the desire to layer one of those into?
It's interesting, like one of our core values, we've just sort of started to articulate that to ourselves in the last year or so. It is sort of entrepreneurialism and creativity, even as we grow. I think I heard Clive Johnson talk about it yesterday, and it's really served them well over the years too. But absolutely, we're open to things like that. We'd love to own a tier 1 asset. I mean, I guess who wouldn't? Because you can quite often spend the same amount of focus and time and effort on a tier 1 asset as a tier 3 asset and get a way better returns. So, of course, we'd love to have that. We are willing to be creative and partner. We've got groups like Mubadala who have really deep pockets, $1 trillion under management, I think they have, and wanting exposure to gold. So we've got ability and ways to think a little outside the box. Ross has, I think, historically been very good at doing that. Look what he's done with Pan Am and that Tahoe asset, and that's a pretty world-class asset. Willing to take a little bit of risk on with it. So yeah, we will be creative on that front. It's not easy to do. There's competition for that. So we're also realistic that, you know what, if we can build up a nice portfolio of real workman-like assets and keep our powder dry enough for those opportunities, great.
That's good. Just one other question from my side. Look, you're moving towards the TSX listing. You know, how has your shareholder register changed in the last months? What have you seen at, you know, from your ownership perspective?
Yeah, I mean, what we've seen, and I'm going to talk a little bit about the combined business, because when Leogold came in, I think 51% of their shares were owned by, was it Newmont, Yamana, and Orion. And ours, we had sort of Ross, Richard Wark, a couple other sort of larger groups like that. And when we put them together, what we've seen is a bit of a rotation of a few guys who aren't going to necessarily be long-term holders of the shares, probably sold out in, I think we had $1 billion in liquidity over the first 3-4 months after announcing the deal. And what we saw is 40 new institutional names come into the stock. A lot of them are more traditional long gold funds. Some of them are generalists. And we're really pleased to see Paulson take a block. We're really pleased to see Joe Foster Van Eck buy some, I think, through the active fund, plus obviously the passive fund. And we've seen that shareholder base that believes in that long-term vision of also a liquid story, and has the backing of a person like Ross Beatty and ourselves that really has a commitment to the long term here. So we've seen it sort of evolve and transition slowly towards that kind of base, which you'd expect it of a company our size now.
That's great. Look, thank you very much for spending time with us and out of your busy day and updating the Red Cloud Securities group of investors and people on the line to what's been going on with Equinox. It sounds exciting, and we're certainly going to be watching your progress.
Great. Thanks, Andrew. It's a great opportunity. I appreciate being here.
Thanks.